Hello everyone, hope you all are doing well, and more importantly, hope you all are safe with all that's going on in the world this week. Welcome back to the Baking Analyst channel. On this channel, we cover everything from cryptocurrencies to personal finance to economics with a focus on DeFi and yield farming as a wealth generation tool. So if that sounds like something that interests you, do consider leaving a like and subscribing to this channel. If you're completely new to the world of DeFi and you're wondering how on earth these people are earning decent sums of passive income every single day by using decentralized protocols, I actually have a free online course that you can access using the link down below with a free trial of Skillshare. You can cancel it at any time and it will come at no cost to you whatsoever. We've also soft launched our Discord community. Early members will be able to participate in this growing community where everyone's just open and sharing their alpha and gaining lifetime free access to all future features that will be rolled out. The link to the Discord channel will be down in the description below as well. This video is also made in partnership with Mudrex. Mudrex is a cryptocurrency investment platform that seeks to simplify crypto investing, allowing users to gain exposure to megatrends without having to pick out individual coins. For example, if you want to profit from DeFi, NFT, and metaverse trends, you can choose from one of the many coin sets here on Mudrex, which build diversification right into your portfolio. And as you can see, there are currently over 25 different coin set themes, all curated by the team over at Mudrex and rebalanced monthly with a minimum investment of just $10. And if you're completely new to crypto and would like some handholding, well, Mudrex also offer a one-to-one portfolio review with clients called Mudrex Select. And with this, you can speak to a real human with no shilling involved. And the best part is, this is a completely free service. If you use the link down below, you can book a free 30-minute portfolio review. Mudrex have also partnered up with this channel this month to do a $100 giveaway. One lucky viewer who signs up using the referral link in the description will be selected at the end of the month to receive this $100. So with that shilling out of the way, let's jump right into today's video. Today we'll be talking about how I'm earning 459% APR on CRO and CRO peg tokens using a tomb fork strategy. And because of the high risks of using a tomb fork strategy and the possibility that the token or algorithmic token might lose its peg, I'll also be talking about a tomb fork selection strategy as well as an exit strategy, or rather when to know that you should be getting out of a tomb fork before it actually fails. So to answer the question, how on earth am I earning 450% on CRO? Well, the short answer is I'm using this new protocol called DarkCrypto. This is a tomb fork that has been going around for a while on Cronos chain, and the special thing about it is they actually have an insurance balance, which means that each Dark token, which is supposed to be pegged to one CRO, is actually backed by some amount of CRO in their reserves, as well as the DAO balance, which consists of other assets like liquidity pool tokens to earn the protocol revenue. So I'll be using this video and looking at DarkCrypto as a case study for how I go about selecting tomb forks and the thought process that you might want to consider. What I'm farming is actually the Dark CRO pair, a bit higher risk, and of course that is commensurate with the higher reward. And if we go ahead and check the balance, that's about 123 US dollars every single day to be harvested. Aside from being a tomb fork that is partially collateralized by a treasury, DarkCrypto is also looking to enter GameFi with the Darkverse. And as you can see, what you can do is you can go into Dark Roll, for example. That is the first game that has come out. What you can do is you can place a wager using Dark tokens, and this essentially collects Dark tokens in the treasury and allows them to, have some form of protocol-owned liquidity. So in addition to the Dark token, which is the algorithmically stabilized CRO-pegged token, you also have the share, which is a DarkCrypto share or Sky, and you also have the bond, which is issued when Dark falls below the 1 CRO peg, and this bond is called Light. So in case you're not familiar with what a tomb fork or tomb finance is all about, tomb forks or tomb finance functions as an algorithmic stablecoin or algorithmically pegged token. For example, Tomb on the Phantom blockchain attempts to peg itself to the price of 1 Phantom, and this peg or the price level of this token is controlled by either printing or inflation and burning the token when people redeem them for bonds. When the price of the peg token goes below the peg, for example, if Dark drops below 1 CRO, it will require people to use their tokens, in this case Tomb or Dark, to redeem bonds. The incentive for people to even purchase a bond in this case would be that if the peg token were to rise above peg in future, then these bonds will be redeemable at a premium. And there's one big problem with this, because this means that once the peg token falls below the desired price level, what happens is, in cases where the asset is completely uncollateralized or does not have any kind of treasury, price support, or DAO support, the entire project's success is dependent on people's belief in the project, and most of the time, when it starts falling below peg and people start selling off, that kind of faith is lost. So today we want to talk about not only the high risk strategy that I mentioned earlier on dark crypto, but also how you can protect yourself and when to know when to exit. So as we saw from the previous slide, on the scenario where the token goes below peg, ultimately at the end of the day, if the token is under collateralized or not collateralized at all, such as all these algorithmic stablecoins, the ability for the token to regain its peg is completely dependent on the faith of its community and the willingness of its community or investors to purchase bonds and take that peg token out of circulating supply, pushing prices up. So if people believe that prices will recover, they will go ahead and buy the bonds. However, if most believe that, this project is done, this project is toast, then they're unlikely to buy the bonds. They're just going to sell off before they lose even more money. Now, the peg of a token to a reference asset using algorithmic means can be defended somewhat by treasury or DAO price support, and this can be done by backing the token by a certain amount of the reference asset. And as you can tell, this is very capital intensive and the effects of this can be limited. So it is important to know how to choose a tool fork that will be able to best defend the peg in the event that price goes below peg, as well as when exactly to get out before the panic starts. Let's talk about the first factor to how I would choose a tool fork to invest in, and that would be the strength of a treasury backing, if there is any. And that is one of the reasons why I chose dark crypto. The first aspect is income streams. Now, income streams can come from several different sources. Now, one of these income streams could be the DAO making use of treasury funds in order to yield farm for other farm tokens and selling them back into the reference asset to create more backing. And of course, it could also do so through things like GameFi, as we have seen earlier. So if we go over to DAO balance, we can see they're actually using the DAO balance to do some yield farming. And as we can see, you have Sky that's farming in a boardroom, and then there are some assets that are in the dark auto pool, which is an auto compounder. There is the Darkverse as well, and this is essentially a casino on the blockchain. Now, of course, admittedly, this is not the most ethical way of generating an income stream, I suppose. However, we do know that looking at cities like Las Vegas or Macau, that casinos make a ton of money. So if these income streams were used as a treasury accumulation mechanism, and in this case it is, then it is more likely that the treasury fund will grow in value, leading to a stronger peg. The next question to consider, of course, will be what if all else fails and we just don't want to depend on people's faith in the project to buy up these bonds. So my way of going about it is I set a stop loss and stick to it. So let's have a look at how I decide my stop loss and how you can go about doing the same. So if we go to this resource called the Gecko terminal by CoinGecko and enter our pair, in this case CRO Dark, and you can do this on Deck Screener as well, as long as you're able to access a table of trades that's happened over time. Then what you're going to want to do is you're going to want to get this plugin on Chrome, and it is called Instant Data Scraper. If we just go ahead and start crawling, this tool simply just collects all the different data points as it scrolls through the pages, and then you get a huge list of prices in CRO terms in this case. Then what you can do is you can press copy all and then paste it into this Excel spreadsheet, and I'll place a download link to this spreadsheet in a pinned comment or in the description. And of course, this spreadsheet unfortunately is a bit crude, but on this spreadsheet you can see that we have a column titled price in CRO, and then you have all the different trades that have happened. We can find our mean price in terms of CRO of the dark token by taking the average of this entire column. And then I found the standard deviation by using the stdev function. And of course, I'm making assumptions here that is normally distributed and the usual statistics stuff if you've done that before in university or in high school. We are able to then see the 95% and 99% confidence intervals. So that gives us a range. So for example, if I were to take the 99% confidence interval and the lower limit being 0.94, I could potentially choose 0.94 as an exit point, because I would know that if it has fallen below 0.94 CRO, there's only a 1% chance that the peg has actually remained the same at the mean price. The lesson of this is that dark does not need to fall a lot for you to decide to stop losses, simply because of how stable this token has been and how small the standard deviation in price was. The insidious thing about this is that at 0.93 or even at 0.90, a lot of people are unlikely to panic a lot. They're going to think that, okay, this is still within reason and this is still within a range psychologically, that the bond mechanism is likely to function and bring the token back up to peg. However, as sophisticated yield farmers, we do not want to just leave it to chance or leave it to other people to buy up these bond tokens and trust that there will be buyers to come in to help fix the situation. And in this case, we see that if we do stop loss at 0.93, our overall portfolio losses are limited to somewhere in the region of 4%, given that only half our portfolio is allocated to the DARK token. And that is, of course, all with reference to CRO. So when you're using a strategy, make sure that you are, of course, intending to hold the reference asset and use that to farm in the long run. So that's all from me today. I hope this video has been informative and useful. If you do like this content, do consider leaving a like and subscribing to this channel. In the meantime, stay safe out there, and I'll see you in the next one. Thanks for watching.